You spent decades saving for retirement, but did you know the state you retire in could quietly drain your savings faster than almost anything else? We're talking about the difference between a comfortable retirement and one where you're watching every dollar disappear to the state government. Most retirees never think about state taxes until it is too late. Today, we're making sure that doesn't happen to you. Welcome to Policy Prepper, where we explain life insurance, annuities, and retirement topics in plain English, no jargon, no sales pitch. I'm your host, and today we're counting down the 5 best and 5 worst states for retirees when it comes to taxes in 2026. Let's start with the big picture. Not every state taxes your income, your Social Security, your pension, or even your 401k withdrawals. 9 states have zero state income tax. That means no tax on your wages, your withdrawals, or most retirement income right from the start. And here's something that surprises a lot of people. 41 states do not tax Social Security benefits at all as of 2026. But some states tax everything: your pension, your 401k, your Social Security check. Living there in retirement can cost you a fortune. The annual difference between retiring in a tax-friendly state versus a tax-heavy one, we're talking potentially over $30,000 every single year. Over the course of a full retirement, that gap can reach tens of thousands, sometimes hundreds of thousands of dollars. This decision matters enormously. All right, let's get into it. Here are the 5 best states for retirees in 2026. Starting with number 5, Arizona. Arizona does not tax Social Security benefits, and the state has some of the lowest property taxes in the entire country. Arizona's warm climate and growing retiree community make it a natural destination. The combination of low taxes and sunshine is hard to beat. Number 4 on our best list, Tennessee. No state income tax on wages or retirement income. Low property taxes. Affordable cost of living. Tennessee retirees keep more of their pension income, their 401k withdrawals, and their Social Security without the state taking a cut. Number 3, Wyoming. No state income tax and the lowest overall tax burden of any state in the country. That's a powerful combination. Wyoming also has low property taxes. If you can handle the winters, your retirement dollars will go significantly further here than almost anywhere else. Number 2, Nevada. No state income tax, no tax on Social Security, and property taxes are low. Plus, the cost of living is very affordable. Nevada doesn't have the income streams other states rely on, so retirees living off savings and Social Security are in a very strong position there. And our number 1 best state for retirees in 2026, Florida. It checks every single box. Florida has no state income tax, no tax on Social Security, and no tax on pension or retirement account income. The state takes almost nothing from retirees. Add warm weather, a massive retiree community, and no estate tax. Florida has been the king of retirement destinations for a reason. Now, an important warning before we move on. States with no income tax often make up that revenue somewhere else. Think higher sales taxes, higher gas taxes, or certain property tax situations. Always look at the full picture, not just income tax alone. Okay, now let's flip the script. Here are the 5 worst states for retirees in 2026. These will cost you the most. Starting with number 5 on the worst list, Connecticut. High property taxes, high cost of living, and Social Security gets taxed above certain income thresholds. Connecticut is one of those states where everything feels expensive, from your home to your groceries to your retirement income. Retirees feel it quickly. Number 4, New York. High income tax rates, sky-high property taxes, and your 401k withdrawals are taxed at the state level. New York does not tax Social Security, which is one small bright spot. But the overall retirement tax burden in New York remains among the highest in the nation. Number 3, Minnesota. Minnesota taxes Social Security benefits, something most states stopped doing years ago, and has high income and property tax rates. For retirees who rely heavily on Social Security, Minnesota can be a particularly painful surprise. The tax hit comes from multiple directions at once. Number 2, Vermont. another state that still taxes Social Security benefits, combined with high income tax rates and high property taxes. Vermont is beautiful, but beauty has a price. Retirees living there on fixed income can find themselves stretched thin by the combined state tax burden. And number one on the worst list, it probably won't surprise you, California. The state taxes all retirement income at rates that can reach up to 13.3%. California taxes your pension. California taxes your 401k withdrawals. California taxes your Social Security, and then adds some of the highest property taxes in the country on top. The cost of living in California is also among the highest anywhere. For retirees on a fixed income, the math simply doesn't work in their favor. Now let's zoom out and talk about Social Security specifically, because this is where a lot of retirees get blindsided. As of 2026, 41 states do not tax Social Security at all. That means most retirees are protected, but not everyone. Montana and New Mexico still tax Social Security in 2026. That's a detail that catches people off guard, especially if they moved there for the scenery. Colorado offers a generous deduction on retirement income for residents over 65, a smart feature that helps offset what would otherwise be a heavy state income tax. And here's something worth knowing about Medicare. Part B premiums jumped nearly 10% in 2026. Smart state tax planning can help offset exactly that kind of rising cost. The bottom line is this: where you retire is one of the single biggest financial decisions of your entire retirement. It deserves real research. Some people move to a tax-friendly state and save so much that it completely changes what their retirement looks like. More travel, more giving, more freedom. Others stay in high-tax states without realizing how much it's costing them, simply because nobody ever laid it out clearly for them, until now. Remember, no income tax states aren't automatically perfect. Always check property taxes, sales taxes, and the cost of housing before making a move. And if you have a pension, a 401k, or significant retirement savings, the specific rules in your target state matter enormously. Get specific answers. This is the kind of planning that can make or break your retirement, and yet most people spend more time planning a vacation than planning where to retire. Head over to policyprepper.com to use our free AI assistant. Ask it anything about retirement taxes, state comparisons, Social Security, annuities, you name it. And if this video helped you, please hit subscribe. We put out plain English retirement content every week. We'll see you in the next one.